Hello, welcome back in. It's November's market update. I'm Tony Marlette Jr. at Brookside Tax and Financial Group. Historically, October is the worst month of the year for the markets. We continued to buck that trend as the S&P 500 was up over 2, Dow Jones up 2.5, NASDAQ up 4.8, and the Russell up 1.8%, all for the month of October. That means that's our 6th consecutive winning month. Year-to-date, markets as a whole are up over 16%. And the earnings leaders, to no surprise, large cap tech stocks and AI. Let's talk about gold for a second. Gold is up 65% so far in 2025. Remember, gold is typically a safe haven or a hedge against volatility, but this is the best year that gold has seen since 1979, and we're up over $4,000 an ounce for the first time in history. And gold is outpacing every asset class this year, including the S&P 500 and Bitcoin. So we mentioned earnings a little bit before. They're the key drivers. We've talked about how earnings are the main component of momentum in the stock market. Also helps a lot with investor confidence, especially in the US with the ongoing AI race. So Q3 earnings, those are the ones that have reported through the end of October, really reinforce this optimism too, as 2/3 of the companies in the S&P 500 have reported. The vast majority of those have outpaced their expectations. Remember, you can have the best quarter ever, but if you don't outpace your expectations, fair or not, some people look at your stock as a little bit of a disappointment. So that means, though, that 1/3 of the market is still to go. And so that remains the key to maintain some of this optimism as we go into November and December, which is typically the strongest part of the year for stocks, which really should not be a surprise to anybody. We talk about risk always being prevalent in the market, and it's not always about market risk. There's many different types of risk that we've discussed before. We talked in our previous update about, it was more of a footnote, but the government shutdown. We talked about how they last 8 days on average. It's becoming a little bit more notable of a concern. We've had a full month plus of this now. And while it has still not yet greatly impacted the economy, if it goes much longer, it likely will, and we'll start to notice some things. Keep in mind too, maybe more importantly, this is a perception equals reality type situation where investors and the markets as a whole do not like uncertainty. So again, this just underscores risk is always prevalent in the market, and it's lurking even in some pretty positive times. It's important to remain vigilant. Yes, you can monitor the gridlock in DC, you can monitor the earnings report, but you should not build your portfolio around these things. Remember, if it's for your goals, it's important that your long-term goals, your strategy, and your time frame are the only metrics that you take into consideration. If you'd like to review those things with us, feel free to do so. Mention this video, and not only will your consultation come at no cost, but you'll also be able to pick up a copy of one of our books on financial and estate planning as well. From all of us at Brookside, we thank you for working with us, and we continue to look forward to working with you.